Sorry to cut you off so abruptly, Lo-Fi. Hello, everybody. Happy Tuesday. It's a beautiful summer day here in the Northern Hemisphere. Hope everybody's having a good week. Yeah, the market is certainly having a good week. Kind of a surprise to see things shooting up just with this much energy. Kind of feels a little bit more than like your typical dead cat bounce. And interesting to see, crypto was sort of outperforming equities last week, which was kind of a bullish sign. And then today we had a really strong rally on the equity side, and of course crypto is right along for the ride with that. So I think the key takeaway here is that all the macro problems are gone and full speed ahead. I'm devising some ways to spend our stable stack on some frivolous parties and things like that. No, of course I jest. It's still like a super sketchy macro environment. I personally am, even though I've sort of like with my personal capital kind of, put a little bit of money in here toward the bottom. Like I'm not expecting that the bottom for sure is in. I think at the very least we might go back down and retest those levels. The reason is that the macro environment is just still super challenging. Again, we had this higher than expected inflation reading last week. Last time that happened, the market really cratered. This time around, it did not. I don't know why that is. Maybe the market's already priced in more of these interest rate hikes, which of course are negative for risk on assets like crypto. But the main thing is we haven't yet seen any like very clear indications that inflation is subsiding. Maybe we're right at that peak right now. A lot of it probably has to do with oil. The oil shooting up has increased the price of just about everything, since energy is such a pivotal and fundamental component of the price of everything. So, on the same token, we still have this war in Europe and also hints of recession incoming. So, the dream is that crypto will actually be able to outperform in a recession, but this has yet to be proven out. So I would caution anybody against getting too bullish with this. But on the same token, this is great to see. If everything is up. Of course, Fox is up, ETH is up, and who knows? Maybe my pessimism is misguided, and maybe this will, in hindsight, we'll think of this as this amazing, V bottom, and what a great opportunity for anybody that had the balls to jump in. In any case, the nice thing about tokenomics is we don't really have to sit here and project what the market is going to do. We just kind of have to assume or take a look at where we're currently at and move forward based on that. At the same time, kind of taking in the worst case scenario, so we don't fall victim to any assumptions that don't really play out or hold water. So with that in mind, I would like to guide you all to the latest runway projections. I posted these in the stage chat, and these are freshly updated. So there's a few things I'd like to call your attention to, and I'm really excited about this because we've seen some big progress here. So the TLDR is that we're now close to having a full year of runway. How was this able to happen? The simple answer is basically 45% reduction in our budget relative to when we started the cutting process. Our monthly spend as a DAO before this started was close to like $550K a month. The July spend, and this is actually this is the final figure for July, was only $313,700. And then moving forward, my own projections based on what workstream leaders are telling me, and also the current proposals that are out, is that we're looking at a spend of about $321K a month. I don't want to glorify these cuts because there is certainly a human cost to this. People have either taken less of their salary, perhaps they're just taking less in USDC and more Fox, which hopefully over the long run will work out. But of course, the DAO has had to let people go, and that's tough. And of course, it's inspired this broader work stream discussion, which is kind of playing out right now, which I think over the long run is very healthy for the DAO, because we're encountering new edge cases we haven't thought of before, and testing assumptions that maybe some people had and others didn't, and we're clarifying things. I really think the DAO is going to make it through stronger. But again, this certainly was not an easy decision to cut for workstream leaders and for people impacted by that. It's not easy either. But from a strict financial standpoint, in terms of ensuring the DAO's survival as long as we can, this has had a very clear positive impact. Prior to making these cuts in June, we were looking at something like 7 or 8 months of runway, given our conditions then, our financial conditions, basically running out of money in maybe February of 23. Currently we're now pushing out to maybe like, June-ish. So, again, those budget cuts make a big difference. And hopefully we as a DAO can strike the right balance of still having enough capital and enough resources, human capital, to build in this bear market. And I think we can. A few little things to point out here. So you'll see the monthly budget figure for July is only 138. That's on what I believe is remaining to be paid out, because of course July payroll has already come and gone, and a lot of that money has been paid out based on the discrepancy between what I was looking at on Friday and today in terms of our dashboard. I believe that's how much it remains to be paid out. It could be a little bit less, but in any case, it was really good to see just a reduced spend for July. Another thing I've done is currently our pool 7 on Rari, which is in a very pesky fashion, accumulating a high amount of interest because it has a super high APR. We've actually, per TMDC approval, we've already paid off $50K towards pool 7 that came out of our stable stack. So in order to get that accounted for correctly, I've reduced the amount of for July, the amount of interest from 89 to 49, because we made a payment towards that loan. And I'll continue to use that method as we make payments towards the interest, which will just have a bit of an impact on our projections in real time as we move through the months here. So that's kind of the big picture, guys. This is also very interesting. I think if you want to click over to these tabs, August and September. So this is how I derive these figures for our total spend. For August, we had, I'm sorry, yeah. So for July, that was a set in stone figure. For August, we also have these figures. This is based somewhat on proposals going through right now, but this is our best estimate. And then September as well. So basically, this figure is a little bit in flux right now. For example, there's some question about what will support wind up coming out at. But a lot of this is set in stone. The bottom line is, these big cuts have made an appreciable impact on our runway. So, we'll continue to revisit this every single week. Again, the extending the runway and maintaining the runway is not the only name of the game in tokenomics, but it is a very fundamental component, because we really don't want to be in a position where we're running out of money. And would it be great if we had 2 years of runway? Fuck yeah, it certainly would. But 1 year is a pretty good amount to work with, and I'm confident that we can make it through. Yeah, right on, Willie. 12 months of stable runway is solid. Obviously not infinite, but there's a lot we can do. And again, one more important caveat here is, a reminder, this assumes the worst case scenario I'm not factoring in any stablecoin or revenue, any stablecoin income or any revenue here. In fact, we're currently bringing in over 200K a month via our USDC Olympus bonds. It's gone up thanks to the fact that Fox has appreciated somewhat, but given our current bond allocation, that's about where we're at. And then, of course, we're bringing in a non-trivial amount of revenue as well. I think it was, well, we can actually revisit that shortly later in the discussion. But that makes a difference too. I mean, you can really quickly, I would suggest if you want to play around with these figures, just make a copy of this tab or this spreadsheet, and you can mess around. So, you know, let's assume a better scenario. Again, we can't play that game, we can't make those assumptions. But if you just want to do some scenario planning, so let's just assume that we're actually making $200K a month, every month for the next, year, whatever. Like, how does that impact our runway? So you could just sort of apply that, and we're actually in much better shape than we kind of are extending our runway well beyond a year. Again, we don't want to assume anything, but just note that currently, we are taking active measures to continue to bring in income to the DAO. And then on the revenue side, things could get much more interesting too, depending on how we manage our product line, how we handle things like our validator income, and of course the state of the crypto markets more than anything on the revenue side, since most of our revenue comes in denominated in crypto, like toke. Yeah, as always, guys, let me know if you have any questions about this stuff. But I just love how everything is out in the open. There is no like hiding any of this information. There's no trying to like sugarcoat it. This is where we're at. And again, I think we're in a pretty strong position here. At the same time, nobody can really FUD the DAO and say, oh, they're going to run out of money in a matter of months. That's simply not true. We're pretty good, pretty well set for the coming 12 months at least. So again, we're gonna come back to the revenue piece shortly. Next on the agenda, I just wanted to highlight the approval of the SCP-90. That was Fund the Tokenomics workstream in Q3 and Q4. So this was officially passed as of this morning. It came out to, we exceeded quorum. We had a total of 6.6 million votes, 5.7 yes, 901,000 no. So about 86% yes, 14% no. So I just want to thank everybody that participated in that discussion. There were some great questions in the forum. People really applying a critical eye to the work stream, which in a bear market is exactly what we should be doing for all the work streams. So we had some great discussions. Thanks to everybody that voted, whether you voted yes or no. That's great. If you do have reservations about the work stream, I would, my goal is to certainly allay those concerns and do awesome work for the DAO. I'm very dedicated to, doing my part to make the DAO, not just like survive, but ultimately to do my part to position it to succeed. Of course, part of that is taking my entire salary in Fox. If the DAO doesn't work out, I'm not going to be making much from this leadership salary. This is time locked an entire year. But I thought it made a lot of sense for the dude that's leading tokenomics to have a direct and very vested interest in the DAO's success. And the best way to do that is through its that's built. We have more stuff that's being built, things like Fox Chain and other improvements to our platform. But again, yeah, thank you for everybody that contributed to this discussion, and also, of course, all the various questions or thoughts. Okay. So we actually don't have a ton in terms of just like little bullet points here on the agenda, but I did want to carve out a good chunk of time for what I think is an important discussion. And I guess if there is any sort of leftover topics, maybe we can just carve out a little time at the end of the chat if anything else comes up. But I wanted to put a big spotlight on something I think is important. And this is something that Marley posted in the forum recently. I believe it was last week. But this relates to one of our key revenue sources. So when this came up last week, I did a little quick analysis of our validators. And the broader point was, okay, we have an arrangement with Taxi Stake whereby there's a rev share agreement, and the reason Taxi Stake is sharing revenue with us from its validators is because ShapeShift is potentially in a good position to send delegations, to send atoms and other tokens to those validators by virtue of our nice visibility in the space. And also potentially via, of course, the platform and guiding users via the platform to making frictionless staking decisions and having Taxi Stake be the destination for that staking. So this has been going on for several months. And I'm going to quote myself verbatim from something I said in the leadership channel. But I said, a relevant data point for further discussion. From April to June, our Taxi Stake validators accounted for 21.1%, 11.6%, and 14.8% of our total revenue, respectively. So I think a big takeaway there is, regardless of, and again, that's in terms of a percentage of our overall revenue, not USD, of course. The USD amounts would be down as well with the market, but the validators are an important revenue source. At the same time, there's a sense on the Taxi Stake side that maybe perhaps ShapeShift could be doing more to be directing atoms and Osmo and other tokens to these validators. This potentially could be a win-win. Of course, Taxi Stake itself, it behooves them, benefits them if there's more financial throughput heading their way. But given this is an important revenue source and the status of our rev share agreement with Taxi Stake, it also could benefit ShapeShift greatly. The other thing I want to bring up here is it's a little bit easy to sort of just like not be thinking about this as much in this bearish environment, because my God, like especially in the wake of the Terra stuff, the Cosmos ecosystem has just gotten nuked. Really, really brutal. Cosmos back down to its bear market levels, like say $7, real bad. I will certainly admit to making the sort of mistake of maybe overlooking the validators a little bit, just because oh gosh, the Cosmos world is getting crushed, and looking at other things. But Cosmos is looking is still looking very promising. Our good friend M. Perklin was apprising me yesterday of kind of the latest and greatest for kind of looking at the second half of 2022 for Cosmos, and they're going to enable some important features like shared security and allowing validators to validate on multiple chains. Also allowing something called Quicksilver that allows new chains to bootstrap their security by tapping into the security set of the Cosmos validator set. So some of this stuff has been talked about, both of those actually, for a couple of years. My theory as to why Cosmos hasn't done great as a token is because those value accrual mechanisms haven't really been in place. But it sounds like they're coming in the second half, like say Q3 and Q4 for those pieces. And that could really make a big difference in terms of Atom in particular. And of course, broadly speaking, the crypto market, if and when it recovers, it has a big recovery, all these things will be worth more. So I just wanted to say all that to kind of set up some context. I think, this is something we need to keep an eye on, and it's a important revenue source. It could bring in a very meaningful amount of revenue, especially if the markets rebound and Cosmos does well. And at the same time, we have these. This is not a normal DAO arrangement in the sense it's an internal thing. We have these partners at Taxi Stake. So all that said, I'm glad we have Marley and Scott up here. to talk about kind of their perspective. They have some numbers to share, and just wanted to kind of put a spotlight on this thing because I think it's highly relevant to tokenomics. So thanks for joining me on stage, guys.
Yeah, thanks for having us up, and that was a nice intro. I linked to the forum post that you alluded to, and you mentioned something on interchain security that's coming soon. So another something to read later, some light reading, technical reading. And yeah, thanks for inviting us up here. Definitely wanted to make this more of a discussion. So if anyone has any questions or definitely suggestions, that's welcome. Go ahead, Scott.
Yeah, thanks guys for inviting us up here to chat about some stuff. But like Sean said, we kind of wanted to take this time to see, like, when we posted that forum post, the one that Sean put in the chat about the 8-month update. We're kind of just reviewing the data that we found and wanted to see like what people thought and ways that we can try to, creative ways we can try to push some delegations to the validators.
Yeah, so we have some slides. I think that we have the Zoom. I guess I can probably screen share if I think about it that way. Just with more of that data, or just shown in another way. I hope I'm sharing the right thing here. Nope. Unless you can see my screen, my slideshow.
Don't think so.
Where it went. Sorry about that. Brave browser, and it's not in Discord; it's in Zoom. It's like accompanying this. That looks like the right box now. Wow, I do not want full screen.
Yeah, we're seeing the USD value chart.
Cool. Yeah, that's the last slide. If I go full screen, does it do that correctly for y'all?
Looking good, man.
Thank you. Cool. So yeah, just some of the data that we had to show was the post that was posted like last week or week and a half ago. Really focused on Cosmos because it got really long without diving into the other ones. And so it's the reason we focused on that is definitely the lion's share of the revenue source. And it's the one that's actually not behaving like the others. So this is like base crypto units. So like atoms delegated, osmosis delegated. And you can see like the time series starts when that one came at a different date. And so the big thing that I see that's different is the amount of like tokens of atoms delegated has been pretty steadily dropping as opposed to the others. This kind of V in osmosis was some superfluid that was in, I think, a UST pool that unbonded during that chaos and then rejoined us later in, I think, a USDC pool. So a very large portion of the osmosis is superfluid, which is, we're actually one of the top superfluid validators, which is kind of interesting. And then Yumi, we actually just got another 10 million after I took this screenshot. These big pops in Yumi were from strategic delegations from the Yumi DAO, or they have like a big fund of kind of like our Fox Gnosis Safe, and they're actively deploying those tokens to certain validators. And so Taxi Stake has been applying and getting in the top like cohort of delegators, or amounts delegated. So yeah, super proud of that.
Marley, those are unfamiliar with superfluid. Can you give a quick TLDR on that and its role in this context?
Sure. So a unique thing about osmosis is it focuses on being an AMM or like a DEX, or a place where you can go trade crypto without a counterparty. And so to do that, so, like individuals or whoever needs to go supply liquidity. So usually it's similar to Uniswap. I'm trying to reduce it as much as I can. You put in something like Atom and Osmo, and if you have so Alice puts in Atom and Osmo in a 1-to-1 ratio, and Bob wants to trade his Atom because he thinks Osmo is some cool new project. Osmosis can facilitate that. Normally, those tokens that are in those liquidity pools just kind of sit idle in a lot of protocols. In approximately, I think in March is when they turned it on. That was like a big delegation bump for us. It allows you to do both, have your cake and eat it too. So super fluid means that it's liquid in a liquidity pool, and it's also doing staking activities with the like half of the LP that is osmosis. So Alice put in like one Atom, one Osmo. She can then go delegate to ShapeShift and get staking rewards on top of her LP rewards. That was a really long explanation. There's people. Coinbase actually has a fantastic article that explains it better than I can. So yeah.
Cool. Thanks for the explanation. I remember Sunny from the Cosmos ecosystem talking about this stuff like 3 years ago, and it's cool to see it sort of come to fruition.
Mm-hmm. It's cool because there's other superfluid like projects on Osmos. So as different pools become online, they're enabling the superfluid staking. So it's cool. So it's not just with Osmo that you can do it with some of the other ones too on the Osmos chain.
Yeah, I think the Atom Osmo is the biggest superfluid, then USDC, Juno, and Evmos. Just top of my head, I think that's pretty much accurate though. The ETH one's huge now too, thanks to XLR. Juno looks about the same. So that's just the data there. I'm gonna go to the next slide. Unless anyone has questions, I did try to figure it out so I can look at the stage chat also. So this is a complicated spreadsheet. This is ripped from Darwin's awesome dashboard magic. And so to help show what Kent was talking about, where we were X% of the revenue for the DAO, like we were really doing well in April. And then that's when the Terra debacle happened and liquidity really got sucked out of, especially the Cosmos ecosystem. So the price of those assets fell a lot. This bottom sheet is where we tried really hard to show how this is like, how to visualize this. But our base rate that we worked into the new validators, Yumi, Juno, Osmosis, was we're going to withhold a certain amount to cover our operating costs, and then the rest we're going to split with the DAO. That was feedback we worked on with DAO members through the forum to like, hey, let's try to do something different for the next set of validators. This chart is trying to show that since April, we've been running at a really heavy deficit where we're not even getting close to that base rate. And so Yumi is one of my favorites, but especially Yumi is really not paying for itself is how I'm trying to think of this. So we really want to try to solicit feedback to how to handle this differently, or the withholding model is not working anymore, quite frankly. So we're trying to figure out other ways to do it. And yeah, so.
Yeah, I think another thing. Go ahead. Another thing on that is just showing is that like, when we do our little reports every week about here's what we're sending to the DAO for payments and all that stuff. We just wanted to show that, it's not like that we're raking it in on all the different validators. We're keeping kind of the rewards, but just showing from like with a lot of other another type of deal could be, that we would expect that 2,600 up front, but we chose to choose it from the rewards, and that's because we definitely believe in the DAO. We're really into the DAO as well as everyone, and really bullish on the DAO. But this was just kind of something to show that we're for the DAO, and we're taking losses on that 2,600, but and most of this is because of the market crash, right? Because of the bear market. We definitely when this wasn't when we didn't have the bear market, these were definitely different numbers. So that was just kind of one of the little things.
And to show the next slide, like the final slide that I've prepared, I've got so much more data I can talk about, but was just to show, like, back in January, we were validating, like, delegated to us was over $60 million. I was like kind of blown away, way beyond my wildest dreams. And the starred dotted line is the price of atoms on the right axis, just to show how much the price of atoms going down has really hurt these statistics. And it correlates directly with revenue, because all of this is generated in those cryptid units. And also another thing I wanted to illustrate is how much of this is coming from the Cosmos validator. It's almost all these blue bars. There's like a couple weeks in here where Osmo was like really, really cranking. But a lot of my charts look like this. It's mostly Cosmos. And there was like a beautiful moment where Chihuahua coin was like paying all my bills, but it lasted a very short amount of time. So that was very peak vibes in hindsight.
It's crazy how closely those two are correlated.
In native Atom, that was the two back. This is the native tokens. John is John. And sorry, which two are correlated, Ken? I'm so sorry.
Oh, just the price of Cosmos, and then the revenue that you had on the prior chart. Just such a close correlation there.
And that wasn't. This one's not revenue. This is
value.
Value delegated. So like, yeah, correlates with these charts, but in dollar terms, not in based unit tokens. But yeah, it is interesting how much Atom. When I finally overlaid that Atom piece, I was like, okay, it was telling data to me.
And kind of from these charts, right, that's on the screen right now, what we, with all the other validators, with Osmo and Yumi and Juno, which were, validators that we started from scratch, we're seeing a positive trend in kind of delegations, and even which is awesome. That's exactly what we want to see. Versus the Cosmos one, which was a little different situation, because that was a taxi stake purchased that at a fair market value from ShapeShift AG, and since that, the Cosmos one is going down kind of steadily. But in general, what we want to see is those upward trend lines that we see on the other validators. And we will probably prepare more, like Sean said at the beginning. We kind of focused on, as we were looking at data for Cosmos, that's the kind of the first proposal that's coming up for renewal. We will look at the other kind of do more posts on how the other validators are doing. But real quickly, we just thought this would be good to kind of show that for most of the validators, we do have that upward trend.
Hey guys, thanks for putting all this together. Can you go one slide forward, I think it is, with all the red? So
this guy.
Yeah, does this, just to see if I understand, this means that we're losing money since June 3rd, we've been losing money on Osmos, Ume, and Juno. Is that what this means?
That means that taxi stake is losing money.
Yeah.
Right.
Yeah, right. And really, I mean, because when we're talking about this, like when people are delegating to the different validators, there's, we're only collecting what the commission is on that. So this is really for just 10% of the total rewards for each chain. And of that is kind of the 30% that taxi stake is collecting. And on this, we said that taxi stake, when we started doing the other, instead of a straight revenue share like we did with Cosmos, which was the first one, we decided we try to do more of a profit share. And so when we look at this data, what we're seeing is when we did profit share stuff, we're still, even though the delegations are going up, mostly because of the market prices on everything, the actual revenue for the validators are going down. And this kind of explains, like, when we do our weekly post, when we collect revenues and transfer it to the DAO, we actually, sorry, I have a 7-year-old jumping around me right now. So
I can help.
yeah, go ahead.
So to your point, Josh, all of this flows from Cosmos to the ShapeShift DAO through us. And so there was a point in time where Osmosis, we were able to withhold that base rate and then send the profits out. And since June and April, always for Yumi, we can't even do that. And so we're not even hitting that base rate. And so the DAO's not seeing any revenue, and we're actually taking a loss.
Right. And how are you covering the loss?
Trying not to, I don't know. It's been a rough couple months, to be honest. And so we've had to reduce our salaries down to near zero, and trying to figure out if we have to do a raise or something.
And you don't have Cosmos on here, so what was the deal? What's the deal with Cosmos?
It is still profitable. So, and that one did not have the base rate baked into it. That was one of the first 15-ish. It was 8 months ago that passed. So Cosmos is still producing over $2,000 a week. For the DAO, let me see if I can find that. Actually, that is not the link I wanted. Last week was $2,700 in USDC, for example, and Atom's up another 8 to 15% since then. So
you're losing 200, 400, 600, something, a little less than $1,000, somewhere between $500 and $1,000. Your ShapeShift is getting no revenue for Osmo, Ume, or Juno, and you're losing that you're losing $500 to $1,000 a month.
That's a week.
A week. Sorry. Yes, correct. A week. Yeah. Huh.
Yeah, and so to talk about the costs a little bit, that's servers in the data center, which have increased because of COVID shortages about 4x in cost. The same Dell servers were $3,500-ish, and now they're about $10,000 with an 8-week lead time. Amazon, we have a second cloud service, to improve resiliency. We rent a data center and 2 full-time staff. So that's where those costs come from.
Yeah.
Thanks for all this data, guys. So let's get down to brass tacks here. I think there's kind of, and this is sort of based on the forum thread, and then kind of our discussion here. For those that want to take a look at the context on this, the title of the thread is Cosmos Validator Update 8 months later. But I think, so there's kind of 2 issues here. One is that, okay, we're in a bear market, and yes, it sucks. Everything is down. It's impacting profitability of staking operations across the board. And of course, that's understandable. But I think there's maybe also a sense that perhaps there's more the DAO can do to send delegations to taxi stakes way. Again, this is ideally this is a mutually beneficial relationship. The DAO is getting a very good rev share from taxi stake. This agreement lasts, I believe, another 4 months. Of course, at that point, taxi stake has the option to propose something else. I would hope that it would be something outlining more collaboration in a nice mutually beneficial way, but also in terms of the more immediate future, what can the DAO be doing right now to send more delegations to taxi stake and improve the profitability of the validators? The 2 very high level things I was thinking of is what can we do from a marketing standpoint? Again, with the caveat that marketing certainly has a lot going on. I've talked to Lindsay about their various initiatives, and of course, this would be just one priority of many. But the thought is, what could we do in terms of visibility, and then what else can be done on the product front in terms of having these integrations Willie in the leadership channel I saw had posted some interesting ideas along those lines. But I think it would really, in my humble opinion, really behoove the DAO to find ways to really create a better situation for both parties, with an eye towards continuing this relationship. Or if you pull back and look at the long term, the big picture, the Cosmos ecosystem, I think, is still super vibrant and promising. Meanwhile, the DAO has a very unique competitive advantage, or I should just say a nice sort of general advantage in the sense of we have a trusted relationship with these folks at TaxiStake, namely Marley and Scott. So yeah, those are just some of my thoughts as the tokenomics guy, but wanted to include that in the discussion as well, because that really kind of guides maybe our near-term actions around this.
I mean, the DAO would, if validations go up, we drive validations, and the prices go up, those become profitable again. So if the DAO thinks it's worth holding on to that as a possible future potential revenue, we could, correct me if I'm wrong here, but the agreement could switch such that TaxiStake will cover their losses based on the Cosmos revenue that would normally go to the DAO. So the DAO would get less revenue from TaxiStake, but we would still be holding on to the future potential, right?
That's one. Yeah, that's an option. And yeah, Ken, it's totally fair to throw it back at us. And like, I'm just going to say, like, I feel like we've been kind of, and thank you, Josh, again. I feel like I'm kind of like making a lot of this up and trying like 8 months ago, it was like really exciting trying to figure out like, how am I going to get atoms to ETH without using an exchange? And thankfully Osmosis and Kara at the time were working well. And so, yeah, I'm also looking for ideas. I think that the DAO holding its own atoms would be, and delegating them would be super ideal. That's also not currently possible with a ETH-based Gnosis safe. A new multi-sig could be set up by the signers. And those rewards could stay in those tokens instead of being sold on the open market for stables and sent to the DAO. That was definitely the right play at the top of the market to exit atoms, but right now we're selling them at the bottom of the market in some ways, potentially. And then those also earn their own rewards. So that's another revenue stream for the DAO once those atoms start turning into more atoms. I would love to see that, because then that also shows there's been a lot of criticism, I think is the correct word, or there's been a critical look at how validators are using their rewards to they've really been like kind of witch hunting some validators that just dump everything into some other token every month, which is what the DAO is doing. I really push back on that and say, like, you have no right to tell me or any organization how to use their own balance sheets. But that's a real like discussion going on in the ecosystem, and it's gaining traction. It's hard to fight that witch hunt. So that's something I think that would be awesome. I'm going to stop sharing so I can look at my notes. Maybe another thing would be, instead of withholding the base rate in that native token, that could be at the end of the month in Fox, in like dollars of Fox or something like that. So instead of like, we collect all these rewards, we convert them to some other stable coin and then do some math on them, we could just do some basic split and then do some kind of Fox reimbursement. And so it's don't have to worry as much about like doing math at the time of receiving. That is another like pain point for me every week. We figured out a pretty good system, but it is something I have to like do every Friday. Any ideas, Scott? Anything to say?
Yeah, I mean, I think the key is that we want to try to drive delegations to the validators. Yeah. And then like what Sean was talking about with kind of negative press, what we've noticed, and we kind of mentioned this in the forum post, is the Shapeshift validators, because we use the keys for the validator, and we collect the rewards, and then we go ahead and transfer them to USDC through osmosis, and then do the split and send them to the DAO. But if one thing that the DAO, and it's not necessarily a good time because the DAO, we just went through all these budget cuts and stuff. But if the DAO actually delegated tokens to the validators, that would do a couple things for us. For one, it would help secure our position, because that's another big part, right? Is the higher on the chain we are, definitely the more commissions we get in fees and stuff like that. We do more transactions. But if I guess to put it this way is our commission is set for Cosmos, for example, is 10%. So that means out of all the rewards that the validator earns, that 10% is collected by the person running the validator. And the current deal with ShapeShift is that we have 70% of that 10% goes to the DAO, and then 30% goes to Taxi Stake. But really, so if we thought of it in terms of $1, that would mean if the validator earned $1, 10 cents goes to that 10% commission, and then there's 90%, 90 cents left that is distributed to all the validators. So if the treasury actually would delegate atoms to their different, or whatever native token, to the different validators, they'd be earning commissions on those tokens in that 90%. So they'd be double dipping. They'd be getting some of the commissions that Taxi Stake is giving to them from that 10%, but they'd also be getting a share of that 90%. So that's one way that we can do it. And then the other important thing about that is that helps us hold our spot in the chain, because those delegations, are going to stay on the validators. Those are going to pretty much stay locked up. I think another thing that we can do is, one thing that's really been successful that Taxi Stake has been doing is we're applying for different grants and actually taking part in test nets and stuff like that. And really what we've noticed is the more active we can be in other communities and other DAOs, the more they're willing to help you out and delegate from their strategic funds. Yumi is a good example. So Taxi Stake took part of this. We were basically a test net, and we became a Genesis validator. And as we've talked with them and worked with them, as the price of Yumi has dropped, their strategic fund has delegated more and more to the validators that took part in that and maintain active stuff. Because we also do a lot of governance, voting, and all that stuff. And in fact, today we just got another 10 million. We didn't ask for it. From the Yumi strategic fund. So that's another thing that that the ShapeShift DAO community could possibly do, is thinking about applying for different grants. Or I think anytime that we integrate anything into the platform, that really sends an indication to these other DAOs that, okay, we're part of your team, right? We're in here for the long haul. And also just other creative solutions, anything marketing. I think Willie had a great post on our forum post about things that the DAO is doing currently, things that are in the process of doing. But I think stuff like that really helps out. But also we're looking for any sort of solutions. Like, the main problem is we just need to drive delegations. When the market goes back up, things will all be happy again. But until then, I think we really need to focus on how can we drive delegations.
Just to zoom out and look at the process by which revenue is currently sent to the DAO, and pardon my ignorance here, but at least when when UST was a thing, when it was viable, you guys would so the DAO would be owed a certain amount. You guys would swap the Cosmos-based asset for UST, excuse me, and then send that over. And it said bridged UST to the DAO. Is that what was happening?
Here, I'll do the flow. Is that okay? Do you want me to?
Oh, yeah.
I didn't mean to cut you off. So it's atoms are collected Friday afternoons. Claim those. You can see this on chain. Those get IBC'd. I'm going to just do atoms because it's a long conversation. Those get IBC'd to Osmosis, swapped on the Atom USDC pool, and then the Axelar bridge goes straight from. You pretty much generate it. You say, "Hey, Axelar, I want to send from Osmosis to Ethereum. And then they set up a one-time address. You send in the tokens and you kind of pray for a few minutes, and hopefully in the next few minutes it shows up in the other end. It was pretty much the same when UST was a thing, except for it was Wormhole instead of Axelar.
Gotcha. It was fortunate that USDC was able to jump into the breach there, and there's enough liquidity, and that all worked out. So the reason I asked that, and maybe Scott, this is what you were getting at in terms of ShapeShift kind of putting some of its own value towards the validators. But is there a scenario where maybe the DAO could approve, let's say, half of all staking revenue generated would instead just stay within the validators and then be restaked essentially, and then that could be those rewards could be pulled out and redelegated over time.
Yeah, that's awesome. That's great, right? Because then we get that compounding. I think the big issue right now is that we don't want to. Taxi Stake doesn't really want to be custodians of money for the DAO, right? Which is why one of the reasons why we do go through this process of converting anything and sending it to the Gnosis safe, right? Ideally, that would be something that the DAO could do, so that we send you the native token, we send you atoms, and then the DAO decides, hey, we're going to restake 20% or whatever to the validator, and then we're going to sell the rest. And kind of the marketing around that could be, and we're selling the rest because we're building these things into our platform, right? We're doing that so we can support each of these communities. And I think that's a way better marketing strategy, and looks a lot better for the DAO, instead of, hey, we're validating on these other chains, but all we're doing is taking the rewards and changing them to USDC and then and selling their tokens instead of our tokens.
Right.
Yeah, and I actually like that one a lot, Ken. One of the ideas of I was like, instead of 70-30, a third is just immediately auto compounded. A third is sent to the DAO in the form of stables, or there's actually Axelar wrapped atoms now. You can't stake those, but like you can hold atoms in the Gnosis safe. And then a third goes to Taxi or something like that. And so that first third starts that snowball effect of its auto compounding. And a metric that people look at when they're picking a validator is their self-staked amount. Currently, we use like the bare minimum, and I think that's a better security choice. But there is a point to be made that like, oh look, this validator also has $10 million delegated to themselves on this key. That shows that they believe in their own security. And so I kind of really like that idea, and I'm trying to formalize how to propose that, but I like that you came up with it as well.
Cool. Yeah, it seems like it could be a good fit. I guess that still presupposes, to your point, Scott, and kind of what with the chat that's happening in the stage here is like that the DAO does have the ability to have a multi-sig to have custody and autonomy over its funds in the Cosmos space, but not an insurmountable obstacle for sure.
Yeah, that's what we're looking for, is just creative stuff like that.
Yeah.
Hey, we got 4 minutes left here. I really appreciate you guys kind of speaking to this. But as we start to wrap up, any final thoughts here? And also wanted to give an opportunity for any like final Q&A here in the audience.
I think I will wait awkwardly for any questions. And then I just want to also make sure that if the point has been to get across is like, it's not that we're not renewing, it's that the current terms will probably change unless like we get like a tripling of the amount delegated or something, the kind of growth that I would like to see. And so there is still hope and probability of a renewal, but just not in the current terms. I saw John popped up.
Cool. Thanks for clarifying. And really appreciate you guys being so proactive about this too. And as opposed to just waiting till the end of the term, and then it's like kind of like shuffling around and maybe not being able to think through everything as much. So thanks for that. Sorry, John, go ahead.
Yeah, no worries. I know we don't have much time, but I do want to quickly just repeat how much I appreciate Taxi Stake and this relationship for the DAO and what you guys put into this so far. It's been really great. I know the last few months have been really tough. I do think I attribute a lot of that to the bear market, including the loss of Cosmos delegations, because I think probably a number of delegators have been liquidity strapped, and that's caused them to undelegate probably for no other reason than they have to. But I really, really appreciate all those efforts, and I appreciate you guys posting this forum post ahead of time. And I'm glad that the DAO is already on the track to do some things to increase this. But I think a lot, clearly there's appetite with a lot of the things discussed today, whether it is, subsidizing for a period of time the ones that are running at a loss, with the Cosmos validator, although that's probably not the biggest, but more importantly, things that drive delegations, or even in the forum post, we discussed potentially something like another, Fox stream or something. I think any of those or some combination of them would make a lot of sense. Plus this idea of custodying the native assets if we set up a multi-sig and redelegating. My guess is that there is some combination of these things that would work, hopefully, for you all. And my kind of, I don't know if question or challenge is the right word, but I just want to really encourage you guys to, like, over the next few weeks, since we have plenty of time between now and when the Cosmos one is up, at least, propose some ideas and let's discuss it in the forum, because I do think that we can definitely find something to go forward and continue this relationship. And I'm certainly personally very supportive of that, but it would really help, I think, for you guys to just put, maybe some proposed terms on the table that we can talk about. We've got plenty of time to talk about that, but I'm hesitant to propose them when I want to make sure that whatever we propose is good with the taxi stake team. So if you guys want to think about that and propose something on the forum of, like, what if we renewed under these terms? And then we can go back and forth and discuss and see, where there's a middle ground, or where there's, something that the DAO likes and taxi stake likes, and go from there. But so far we got a lot of good ideas, but it'd be really nice to see you guys put forward, like, here is something we would be good with. Because I'm still a little unclear. I mean, I've heard a lot of ideas about what you guys would like, but I'm still a little unclear of, like, what is sufficient for you guys.
That's fair. And I'm just giving the time or the room. Sorry, I'm just allowing room for other ideas to flow in, because a lot of times it's like you throw out an idea and then that kind of shapes the whole conversation. So it just also allowing some creativity to build. And that's also why we started like 3 months early. So, and thank you for the kind words.
For sure. And I really appreciate that. And we have plenty of time to figure it out, but I would rather us figure it out well ahead of that if we can. Because I think that there should be more than enough alignment. And obviously, if the markets come back, these things will probably become profitable overnight. But we don't want to depend on that. And I do think that there's a lot more the DAO is doing and can do to make this a beneficial relationship for everybody.
Cool, guys. Great discussion. I think a good thing to make sure that happens is that we keep this discussion going. So I think that forum is a great avenue to make that happen. But yeah, we have some time here to kind of optimize this relationship. I think everybody seems very just bullish and positive on this arrangement. I think Cosmos in general, like, people are generally very bullish on that environment too. It just we just need to fine tune this relationship. Yeah, Marley and Scott, thanks again for coming up. I think if there's material changes to this, to your side of things, to the revenue and value, or there's new thoughts about how to fine tune this relationship, certainly this could be a good forum right here in the tokenomics chat to make that happen. But I want to echo what everybody else is saying and just say, yeah, appreciate you guys for the service you run and the relationship that you've built with the DAO.
Yeah, thanks for having us.
Yeah, this is great.
Cool. Well, thanks everybody for tuning in. Always great to have some homies up on stage. Yeah, there'll be a lot more action happening in tokenomics. I'm doing more research into fun roll-up stuff. In TMDC land, we're really trying to optimize our payments on our Rari loans. You can follow along with that in the public tokenomics channel. But as always, we'll continue to plug away here, and have an awesome night, guys. Take care.